You open your futures app and your heart is already racing. Bitcoin just broke another all-time high in this 2025 bull run. Green candles everywhere. Twitter screaming, "Send it." Your friends posting screenshots of 300% PNL. You stare at your tiny balance and that big, tempting slider. 50x, 75x, 100x leverage. One swipe, one click, and maybe this is finally your shortcut out of the grind. So you do it. You crank the leverage up, size the position way bigger than you know you should, and hit open. For a few minutes, it feels like you hacked life. Every tiny move in price explodes your unrealized profit. Plus 20%, plus 40%, plus 80%. You start calculating what happens if Bitcoin just keeps going. New phone, new car, new life. Then one candle wipes it all. The chart pulls back a little, nothing crazy on the higher time frame. But with that insane leverage, your liquidation price is sitting a few dollars away. Price dips, wicks down, and suddenly your screen freezes for a second. The position disappears. Your balance is a fraction of what it was 10 minutes ago. No dramatic music, no warning from the market, just a small red line in the history tab. Liquidation. If that scene feels uncomfortably familiar, this video is for you. We're going to talk honestly about leverage in crypto futures, especially for beginners in this bull run. Why most people blow up their accounts long before they make it, what best leverage actually means, and how to survive long enough to let opportunity work in your favor instead of turning you into exit liquidity for someone else's trade. Let me introduce you to Alex. Alex isn't stupid. He has a decent job, pays his bills, and like a lot of people, he watched Bitcoin crash in the last bear market and quietly promised himself, next time there's a bull run, I'm not missing it. Throughout 2024, he kept seeing headlines about ETFs, institutional money, derivatives volume hitting new highs. Crypto was no longer just a niche thing. It felt like the big leagues were here. By early 2025, price is breaking out again. Everywhere Alex looks, people are talking about futures. He sees thumbnails screaming 100x, small account challenge. I turned $200 into $20,000. None of those videos show the other side of the story. They don't show the guys who lost their entire account trying to copy the same move. Alex doesn't know that yet. All he sees is, if they can do it, maybe I can too. He deposits a few $100s onto a popular exchange and opens his first crypto futures trade with very low leverage. 2 or 3 times in a row, the market moves in his favor. He makes 10%, 20%, sometimes 30% on a single trade. Nothing life-changing, but enough to light up his dopamine. He starts to think, wait, maybe I'm actually good at this. Maybe this is my edge. Then comes the trade that changes everything. Bitcoin has been trending up for days. Funding is positive, open interest is climbing. Everyone is talking about a breakout. Alex watches price push into resistance and thinks, if this candle breaks, we're going straight to the next level. He doesn't want to miss the move, and his small account feels like a limitation. So instead of adding slowly with safe leverage, he cranks it up. 25x, then 50x. He opens a position that is way too big for his size, but in the moment it feels justified. After all, this is the big one, right? For a while it works. The position goes green fast. Unrealized profit jumps. He sends a screenshot to a friend. They joke about finally being able to quit their jobs. Alex moves his stop loss, but not in a disciplined, planned way. He drags it closer because he feels safe. He thinks, there's no way price comes all the way back here. Not in this bullish momentum. I'll just ride it. The market does what it always does to overconfident traders. It spikes up just enough to suck in everyone who was waiting, then snaps back violently. On the 1-minute chart, it's just another wick. On higher time frames, it barely registers. But on Alex's highly leveraged position, that tiny move is catastrophic. He watches his P&L shrink from plus 80% to plus 20% to red in a matter of seconds. Now he's frozen. He tells himself, it's just a pullback. It'll bounce. I'll close when it goes back to my entry. The bounce never comes. Price bleeds a little lower, right into his liquidation zone. The notification appears. Position liquidated. Silence. Alex stares at the screen, then at his balance. Most of the money he spent months setting aside is gone, erased in less time than a coffee break. He doesn't slam the desk or scream. He just feels empty, embarrassed. He scrolls through his transaction history, as if the numbers will change if he looks hard enough. They don't. Over the next few days, the emotional hangover starts. He replays every decision in his head. Why did he raise the leverage? Why did he move the stop? Why didn't he just stick to spot or small size? He avoids opening the exchange app because seeing the lower balance makes his stomach knot up. He ignores messages from the same friend he sent the screenshot to. And here's the twist. The market does actually continue higher later that week. The breakout he dreamed of eventually happens, but Alex is on the sidelines with almost no capital left. That hurts even more than the liquidation itself. It's not just the money he lost, it's the opportunity he feels like he permanently killed. Alex's story is not unique. In fact, it is the default path for thousands of new futures traders every bull run. A few early wins, growing confidence, increasing leverage, then one or two bad trades that wipe out most of the account. If you've ever rage deleted the app, if you've ever stared at a liquidation notice in disbelief, you know this feeling. And if you haven't yet, this video is your chance to avoid becoming the next Alex. So what actually went wrong for Alex? On the surface, it looks simple. He used too much leverage. But if you stop there, you miss the real lesson. The problem started long before he clicked open position. It started in his mind. First, there is FOMO. When Alex saw Bitcoin breaking out and everyone posting big wins, he wasn't just looking at a chart, he was looking at a fantasy, a faster version of his dream life. FOMO is powerful because it doesn't feel like greed, it feels like urgency. It whispers, if you don't go big right now, this chance will be gone forever. Under that pressure, slow, boring, responsible risk management feels like self-sabotage. That's why he pushed the leverage slider higher than he planned. Then there is classic greed. After a few early wins, Alex stopped thinking in terms of risk and started thinking in terms of how much he could make on the next trade. He was no longer asking, what happens if I'm wrong? He was only asking, what if this is the one that finally blows up my account in a good way? Greed makes you forget that the market doesn't owe you a jackpot just because you showed up. There is also the refusal to accept loss. Like many traders, Alex hated cutting his losers. Setting a stop loss felt like admitting defeat before the trade even started. So even when price moved against him, he preferred to wait for the bounce instead of taking a small, controlled loss. In leveraged futures, that hesitation is deadly because price can travel from acceptable risk to liquidation in a tiny move. Underneath all of this is a missing system. Alex didn't have a clear framework for how he was going to trade futures. Was he a day trader or a swing trader? What percentage of his account was he willing to risk per position? What was his maximum leverage in different market conditions? None of these questions were answered. Without a system, every decision becomes emotional, and emotional decisions in a leveraged market are like driving at 200 kilometers per hour with no seatbelt. Then we have the environment he was swimming in. Most of the content Alex consumed focused on results, not process. Screenshots, big P&L numbers. I turned X into Y in 30 days. Very few creators spent time showing the long, boring months of discipline, or the trades they didn't take, or the days they did nothing because the setup wasn't there. When your feed is polluted with highlight reels, your brain starts to believe that everyone is winning big except you, and that pushes you toward reckless behavior. On top of that, crypto futures are structurally dangerous for beginners. Many exchanges make it incredibly easy to crank leverage up to 50x, 100x or more with a couple of taps, especially in this bull run environment where derivatives volume is at record levels. The product is built for speed and excitement, not for patient learning. If you step into that environment with no rulebook, you're volunteering to be someone else's liquidity. So the real cause of Alex's disaster is a combination of three forces working together: emotional pressure, lack of structure, and a toxic learning environment. FOMO and greed push him to go big. Missing rules leave him unprotected. The content around him glorifies reckless risk-taking and hides the casualties. The painful truth is this: The market doesn't care about your goals, your plans, or how long you've been studying crypto. It only reacts to orders, liquidity, and probability. If you don't respect the math of risk, you will eventually donate your account to someone who does. That is why so many beginners in every bull run follow the same pattern, and why best leverage is not a magic number you can copy from a video. It is something you design for yourself, inside a clear risk framework that fits your real financial situation. The good news is that once you see these patterns, you can start to change them. You can't remove volatility from crypto futures, but you can remove self-destruction from your side of the equation. And that is exactly what we're going to build in the next parts of this video. Let's flip the usual narrative for a moment. If you watch enough crypto content, you'll hear the same storyline repeated over and over. The market is manipulated. Whales hunt your stops. Exchanges are rigged. KOLs are dumping on you. There is some truth in that. Big players do move markets. Some platforms are not as honest as they should be. But if you let that story dominate your thinking, you create a very convenient illusion. None of this is your fault. The uncomfortable reality is that, in most cases, the market does not even know you exist. It is not personally attacking your tiny account. When your over-leveraged long gets liquidated by a quick wick, it feels like an attack. But in truth, you simply parked your liquidation price right in the most crowded zone on the chart and hoped for the best. The market didn't hunt you. You volunteered. Here is another belief that needs to be challenged. Crypto is the fastest way to get rich, especially with leverage. That idea sounds exciting, but it hides a deeper truth. Leverage doesn't speed up your journey to financial freedom. It accelerates whatever habits you already have. If you are disciplined, you might grow faster. If you are reckless, you will blow up faster. Futures don't magically turn you into a better version of yourself. They expose who you really are with money. People also love to say, "It's fine, I'm only playing with small money." But those small habits become your default operating system. Here is a different way to look at it. Crypto futures are not a casino. They are an X-ray machine for your financial character. In a very short period of time, they reveal your patience level, your ability to handle uncertainty, your tolerance for boredom, and your willingness to follow your own rules. That is why some people swear that trading broke them, while others say it forced them to finally grow up with money. Another common assumption is that the key to success is finding the next secret indicator, or the next perfect strategy, or the next guru to copy. Yet the graveyard of liquidated accounts is full of people who had good entries and decent strategies, but zero control over position size and leverage. You don't blow up because your moving average was on the wrong setting. You blow up because you put half your account into a single over-leveraged bet and refuse to cut it. So here is the unpopular truth. The single biggest edge you can have in this bull run is not some magic number like the best leverage is always 5x. The real edge is being the tiny minority of beginners who actually treats this like a serious risk business from day one. Imagine two traders starting with the same $1,000. One is chasing screenshots, taking 25x, 50x leverage, moving stops based on emotion. The other one caps leverage at, say, 3x, 5x, risks 1 to 2% per trade, and sits out when the chart is a mess. Over 6 months of volatile bull run price action, their equity curves will look completely different. Not because one of them knows every on-chain metric or macro narrative, but because one of them chose survival as a priority and the other chose excitement. You cannot control what whales do. You cannot control ETF flows, macro news, or a sudden liquidation cascade. But you can control 3 things: how much you risk, how much leverage you use, and how fast you are willing to accept that you might be wrong. If you take radical ownership of those 3 levers, the market stops feeling like a personal enemy and starts looking like a chaotic but manageable environment. The big question, then, is this. If we stop waiting for a perfect market and stop blaming external forces, what can a beginner actually do, practically, to trade crypto futures in this bull run without blowing up? That's what we'll build next. A simple, honest framework you can start applying from your very next trade. Let's turn all of this into something you can actually use. We are going to build a simple framework for beginners trading crypto futures in this 2025 bull run. It won't make trading easy, but it will give you a structure that dramatically reduces the chances of blowing up your account. Think of it as a set of rules that protect you from the worst version of yourself. Step 1. Take inventory of your real situation. Before you open another futures trade, pause and answer a few questions honestly. How much total money do you have outside of crypto? How much of that is currently in crypto spot? How much is in futures? If every dollar in your futures account disappeared tomorrow, would it hurt your life? Or just your ego? Write those numbers down. They are the foundation for every decision you make. Your leverage, position size, and risk per trade must be anchored to reality, not to your dreams. Step 2. Decide your maximum risk per trade. Pick a percentage that feels almost annoyingly small. For most beginners, that should be around 1 to 2% of your total futures account per trade. That means if you have $1,000, the maximum you are willing to lose on a single idea is $10, $20. Not $200, not $500. A small, boring number. From now on, every trade you place must be sized so that if your stop loss is hit, the loss equals that chosen percentage or less. If a setup requires such a wide stop that you cannot keep the loss small, you either use less leverage or you skip the trade. Step 3. Set a personal leverage ceiling. Forget about the platform's maximum leverage. Set your own cap. For many beginners, that might be 3x, 5x, maybe 7x in very specific situations. The point is not to find a magic number, but to create a hard boundary that protects you from your own impulses. Write it somewhere you see it before every trade. My maximum leverage is X. If I feel the urge to go higher, I walk away for 10 minutes. Make this non-negotiable. Your future self will thank you. Step 4. Separate learning from gambling. Choose a small portion of your account as your education budget. Money you accept might be lost while you learn. On that portion, you can experiment with different strategies, time frames, and markets, but you still respect your risk per trade and leverage ceiling. The rest of your account is reserved for only your highest quality setups, the trades that actually fit your written plan. If you catch yourself taking random positions because you are bored, that's a sign you are drifting back into casino mode. Step 5. Create a simple routine around your trades. Before entering a position, ask 3 questions. What is my thesis? Where am I wrong? How much will I lose if I am wrong? After closing a position, win or lose, take 30 seconds to write down what happened and how you felt. Did you move your stop? Did you add size impulsively? Did you close early out of fear? This tiny habit of journaling creates a feedback loop. Over time, you will see your own patterns more clearly than any indicator can show you. Step 6. Protect your mental capital. Give yourself daily and weekly limits. For example, a maximum of 2 or 3 trades per day and a maximum drawdown per day or per week. If you hit that limit, you stop trading no matter how good the next setup looks. This is how you prevent one bad emotional spiral from destroying weeks or months of progress. Remember, surviving is a strategy. None of this is glamorous. It won't make for the most exciting thumbnail. But this is the kind of structure that separates traders who are still here after the bull run from those who only have screenshots of what could have been. The point is not to eliminate risk. The point is to make sure that when the market inevitably moves against you, the damage is controlled, the lesson is clear, and you still have enough capital, energy, and confidence to show up again tomorrow. In the next part, we'll zoom out even further, because this is not just about numbers on a screen. It's about who you are becoming every time you choose discipline over impulse in a market that is designed to test you. Let us talk about the part almost no one shows in their P&L screenshots, what this actually feels like. Losing money in crypto futures is not just a number changing on a chart. It's the way your chest tightens when you wake up and remember that big red trade from last night. It's the way you avoid opening the app because you already know the balance will hurt. It's the awkward silence when a friend asks, "How's trading going?" and you don't know whether to lie or admit that you've been getting crushed. Maybe you promised your family you were being careful. Maybe you told yourself you were only using extra money. But when a few clicks erase months of savings or a year of small, disciplined deposits, it doesn't feel like extra anymore. It feels like a betrayal of your own future, of your own effort. That weight sits on your shoulders when you go to work, when you try to sleep, when you scroll social media and see other people bragging about their wins. Here is the hard truth. Crypto futures compress your emotional cycles. Greed, fear, hope, regret, shame. They don't take years to show up, they take minutes. One moment you feel like a genius, the next you feel like a complete failure. If you let those emotions run the show, your trading becomes a series of reactions instead of decisions. You chase losses to make it back. You double your leverage in anger. You close good trades too early because you can't stand the idea of another red candle. But there is another side to this. Every time you choose to respect your stop loss, even when it hurts, you are training yourself to be someone who can accept being wrong without collapsing. Every time you stick to your maximum leverage limit, even when the market looks too good to miss, you are proving to yourself that your rules mean more than your impulses. Every time you walk away after hitting your daily loss limit, instead of forcing one more trade, you are building a version of you that can be trusted with larger amounts of money in the future. In that sense, crypto futures are not just a market, they are a mirror. They reflect back your relationship with risk, with patience, with responsibility. They show you if you are someone who needs constant excitement to feel alive, or someone who can sit through boredom and still stick to the plan. They show you whether you treat money as a toy or as a tool. That reflection can be painful, but it is also incredibly valuable if you are willing to look at it honestly. Maybe you have already blown up an account, maybe more than one. That doesn't automatically mean you are doomed to repeat it. What matters is what you decide those experiences mean. Are they proof that you are bad with money? Or are they early tuition for a much more mature version of yourself? You don't have to pretend that losses don't hurt. You don't have to be a robot. But you also don't have to stay trapped in the same loop of FOMO, over leverage, liquidation, and regret. You can decide that from this point forward, you will treat every trade as a test of your process, not of your worth as a person. Here is the beautiful twist. When you start to see trading this way, something changes outside of the charts too. You become more thoughtful about how you spend, save, and invest in the rest of your life. You become more careful with promises you make to yourself. You learn that real confidence doesn't come from one big win. It comes from hundreds of small, boring decisions that prove you can trust yourself. Crypto futures will always be risky. They will always be volatile. There will always be someone on the internet who appears to be making more, faster, with crazier leverage. But you are not competing with their highlight reel. You are competing with the older version of you who didn't have a plan. If this video does anything, I hope it helps you see that surviving, with your account, your mind, and your self-respect intact, is not a consolation prize. It is the real win. So where does this leave you? Standing in the middle of a brutal, exciting, unpredictable 2025 bull run. First, let's be honest. Crypto futures are not going to suddenly become safe. Volatility won't politely calm down just because you decided to take risk management seriously. There will still be insane wicks, surprise news, flash crashes, and euphoric pumps that make you question every decision. This market will continue to reward a few people spectacularly and punish many others who treat it like a shortcut. But there is a path in the middle. You don't need to be a genius or a full-time professional trader to survive and even thrive in this environment. You need a clear understanding of what leverage really does to your money, a simple framework for how much you're willing to risk, and the courage to stick to your rules when everyone else is losing their minds. If you can do that better this month than you did last month, you are already ahead of the majority of beginners rushing into futures right now. You are not trying to win every single trade. You are not trying to catch every single move. Your real goal is to still have capital and a relatively calm mind by the time this bull run is over. Because while most people are busy chasing the trade that will change everything, the traders who last are quietly focusing on not losing everything they already have. If anything in Alex's story felt like looking in a mirror, use that discomfort. Let it push you to change the way you handle leverage and risk before the market forces you to learn the hard way. Revisit your numbers. Write down your rules. Decide what your maximum leverage is. Decide what size of loss you are truly willing to accept, and then prove it to yourself one trade at a time. If this video helped you see crypto futures a little more clearly, a little less magical, and a little more manageable, I'd love to hear from you. Share your own story in the comments. The wins you're proud of, the painful lessons you've learned, or the changes you're committing to from today forward. There is a good chance someone reading it will whisper, "That's exactly what I needed to hear." If you want to keep learning, don't rush away. Click on the channel, take a look around, and pick one or two more videos that speak to where you are right now. And if you find value here, consider supporting the channel. Like this video, subscribe, and check the description for links to the exchanges I personally use. If you decide to sign up through those links, you might get a bonus or fee discount, and you'll be helping the channel grow. Just remember, no matter where you trade, the rules about leverage and risk still apply. In the next videos, we're going to go even deeper into real case studies of blown-up accounts and into the subtle ways big players set up traps in this market. If you're serious about surviving, not just screenshotting, you won't want to miss them. And remember this, choosing safer leverage is not the same as playing scared. It is choosing to play a longer game. Anyone can mash the 50x or 100x button and hope for a miracle. It takes far more strength to say, "No, I'm going to grow this account in a way that I can sleep at night, look my family in the eye, and still be here when others have burned out." That mindset doesn't only change your trades, it slowly changes your entire relationship with money, risk, and opportunity.